In this video, we're going to learn how the price of Bitcoin is determined and how cryptocurrency exchanges work. The price of Bitcoin is controlled by two things: people buying Bitcoin and people selling Bitcoin. Bob would like to buy one Bitcoin for $10. Alice would like to sell one Bitcoin for $10. Bob and Alice can use a cryptocurrency exchange to make this trade. A cryptocurrency exchange is commonly used for people looking to exchange normal currency for cryptocurrencies. Bob needs to place a buy order to the exchange and Alice needs to place a sell order. The exchange sees that Bob's buy order matches the price that Alice wants to sell for. The orders are matched and the money is transferred to Alice through the exchange while the Bitcoin is transferred to Bob. The price for one Bitcoin based on the orders was $10, and this becomes the current trading price for one Bitcoin. Now let's say Bob wants to buy two more Bitcoins and he wants to pay $16 for them. Dave has two Bitcoins he wants to sell for $16. They follow the same process as before by submitting orders to the exchange. The exchange matches the order and the money and the Bitcoin are transferred to Dave and Bob. The price of that last order was $16 for two Bitcoins, thus the updated trading price is now $8 for one Bitcoin, since the trading price is shown for the price of one Bitcoin. We've seen what happens when orders are matched by an exchange, but what happens when they aren't? Suppose Bob wants to buy one Bitcoin for $12 and Maggie wants to sell one Bitcoin for $20. The orders are submitted to the exchange, but since they don't match, they are added to something called the order book, which keeps track of buy and sell orders that haven't been filled yet. Dave later says he wants to sell one Bitcoin for $12. This order is sent to the exchange and Bob's order on the order book gets matched. The trade is executed and Bob's order is taken off the order book. The money is transferred to Dave and the Bitcoin is transferred to Bob. We've seen some of the details behind transactions using an exchange. Let's look at what makes the price move on a larger scale. On the left we have buyers and on the right we have sellers. As you can see, the buyers have set lower prices than the sellers. Suppose suddenly many people want to sell Bitcoin and fewer people want to buy. Buyers will start to leave the market and sellers will enter the market. Sellers set their prices lower, hoping to attract reluctant buyers. The trade price trends down as sellers set their prices lower and less buyers enter the market. Since Bitcoin's price is the price of the most recent trade, this is how Bitcoin's price drops and is caused due to an increase in supply and a decrease in demand. The increased supply comes from people trying to sell Bitcoin and setting their prices low, thus making more Bitcoin available in the market. The decreased demand is due to people not wanting to buy Bitcoin, thus less buy orders coming in. Sellers keep setting their prices lower to get their orders filled and the price of Bitcoin goes down. On the other hand, suppose many people want to buy Bitcoin and less people want to sell. Buyers will set their prices higher in order to meet the higher prices of sellers. Since less people will want to sell, buyers will need to compete for a limited supply. In this case, the supply of Bitcoin is low due to less sellers and the demand is high due to more buyers. As trades of increasing value are executed, the price of Bitcoin increases. People always ask why cryptocurrency exchanges have different prices. This is simply because different people are buying and selling on different exchanges. There is no process where exchanges talk to each other in order to agree on the price of Bitcoin. The price of Bitcoin is driven by buyers and sellers, and every exchange has different people buying and selling on their platform. The final thing I would like to discuss is price speculation. Many people ask questions or make statements like, when is the next price dip? When is the next price correction? Bitcoin will be X dollars in year Y. Bitcoin will crash because of blank. These statements are examples of speculation, which is defined as investment with the hope of gain, but with the risk of loss. We've seen that the price of Bitcoin is simply controlled by the actions of buyers and sellers on Bitcoin exchanges. But to answer the previous questions, someone would have to accurately predict the behavior and actions of millions of buyers and sellers interacting on these exchanges. There is no accurate and reliable way to make that prediction, thus speculative investment is extremely risky, especially with a volatile investment like Bitcoin. Thanks for watching. If you want a written version of this tutorial, I have added a link in the description to my website where you can find it. I hope you enjoyed the video. Please be sure to hit the like button below if you did, and subscribe for future videos on Bitcoin and cryptocurrency.